All right, hello everyone for joining us for the webinar tonight. We're going to give it a couple more minutes so everyone can join, for those who might be late, and then we'll proceed. Hello everyone, good evening. Thanks for joining us for the 7 Pro Tips for Buying Your First Home webinar. This is being presented by DuPage Credit Union. I just want to let everyone know if you have any kind of problems getting in or you're experiencing problems to just let us know in that chat box. Also for the chat box, it's over at the bottom left-hand corner. You can also just type in your questions as we're going along. If you have a question about any of the slides or anything one of our presenters has been talking about, just let us know in that chat box and we'll make sure to answer every single question at the end of the presentation, and we'll allow some extra time at the end to get those questions answered for you. So let's start. Obviously this webinar is called 7 Pro Tips for Buying Your First Home, and definitely we've got some pros here to explain some things to you that hopefully will be really kind of enlightening, some things that you haven't thought about before. And the people here with me include a real estate expert, a professional realtor for Remax Cornerstone in the kind of Fox Valley area, and that is Denise Duba. I want to let everyone know she's had over 20 years experience. Is that right? Mm-hmm. Also with me here is Cheryl Rentz. She actually works for the credit union in the mortgage sales department, and she's also got some experience, right? How many years is that, Cheryl?
18.
18 years. Myself, my name is Karl Krzyzkowski, and yes, that is a big, long Polish name. And I'll be the moderator for this evening, and I'll also be taking one of those slides. So everyone just get comfortable. Hopefully you're at home, maybe in pajamas. And just settle back and listen in. So we're going to start with number 7 of our 7 pro tips. And number 7 is called Expect the Unexpected in terms of your budget. So Cheryl.
Thank you, Carl. What is the total cost of the transaction? There's more to consider than just your down payment. There are also closing costs that will need to be paid by the buyer at closing, and these can range anywhere from $3,000 to $4,000. We recommend talking to your lender ahead of time to get a better estimate of your closing costs as early as possible. It is important to save these additional funds as you will be required to prove adequate funds for closing throughout the loan process. Determine an estimate of the property taxes typical in the area that you are looking to buy. Property taxes vary widely from one county to the next. Keep in mind that 1/12 of your annual real estate tax bill will be added to your monthly mortgage payment. In addition to property taxes, there are other expenses to consider as well. A single-family home with annual taxes of $6,000 a year will add $500 to your monthly payment. Homeowners insurance is also a requirement regardless of the home type. This cost will vary depending on the property. 1/12 of the cost of your annual premium will also be added to your monthly mortgage payment. Condominiums typically require the added expense of a monthly homeowners association fee, also known as an HOA fee. This fee can vary greatly depending on the property and the amenities offered. Keep in mind, this would increase your payment obligation as well. Townhomes are a style of home and could be considered a condominium or an attached home. It's important to ask your realtor how it is classified. There are special considerations with new construction home that you're planning to purchase. Be advised, however, that if the land was undeveloped, property taxes initially could be quite low, but can increase significantly once the property has been improved, which can take a couple of years. Be sure to use a realistic assessment when determining property taxes. Multiply your purchase price by 2.5% to give yourself a good estimate of potential future taxes. Keep in mind, no matter what type of property you purchase, taxes are subject to change annually. And yes, you guessed it, they usually go up. Think about your bills. Where is your money currently going? What bills do you currently owe? Will you need to make any major purchases after you purchase your home, like an automobile? How will that new payment impact your ability to make payments on your mortgage? Make sure you take the time to make a budget and be realistic. Count all of your expenses, including groceries, gas, childcare, and even entertainment in your budget. Make sure you take a good, honest look at your credit report. Know what's reporting. Credit problems, whether they're real or imagined, should be discussed with your lender as soon as you think you're ready to buy. Your lender should offer you advice on how to improve your credit rating well in advance of actually purchasing your home. And whatever you do, make sure you get comfortable with your payment before you marry it. Once the commitment is made, altering the arrangements or attempting to walk away can be very difficult as well as costly.
It's like my favorite slide of the whole presentation right here.
Think about what you're currently paying for your housing expense. If you're currently paying rent, take the time to determine what the difference is between your new proposed payment and the rent payment. Be sure to include everything that goes into your housing expense: your taxes, your principal and interest payment, insurance, as well as any assessments you may be paying. Open up a savings account and take the difference and deposit that. That way you can get comfortable with the payment and make sure that you can live with it before you're committed to it. That way you can also save extra funds for your move. Think about how this payment is going to affect your lifestyle. Will this impact what you currently spend on entertainment? Are you still able to meet your savings goals and objectives? Are you able to save 6 months of principal, interest, taxes, and insurance after closing to cover your housing expense in the event of an emergency? And be realistic in your assessment of your expenses. Make sure you live within your means. Think about your discretionary expenses. It is probably highly unlikely that you can feed a family of 4 with a grocery budget of $50 a month. And be sure to choose a property that fits your lifestyle. Do you want to spend your Saturdays cleaning the gutters or making home repairs? What future upkeep will there be on the new home? The larger the home, the more costly home improvements can be. Think about it. Replacing floor covering in a 1,500 square foot home is very different from replacing it in a 3,500 square foot home. Think about what you'll need to maintain your property. Factor in the cost of maintenance equipment that you might need to purchase to maintain your property, such as a lawnmower, or a snow blower, or garden tools. And keep in mind that the larger the home, the higher your cost of utilities, such as heating and electricity, are going to be.
All right, so those are all good points, especially I'd probably say the floor covering department, which I've personally had some experience in. And there's definitely a huge difference in material cost and work involved, as I did myself, between different types of square footages, from doing one room that might be 300 square feet to over 1,100 square feet like I did, which was a lot of work, and saved a lot in labor by doing it yourself. But for those who aren't as handy, that's going to run up the bill as well. So that's another good consideration. On the next slide, Denise is actually going to go through how to do your research the smart way. So Denise, let me hand that over to you.
Okay, well, I think we were looking for efficient and effective use of time on doing your research. So if you haven't already found the community of your dreams, how do you go about finding the perfect fit? And narrowing in a community the size of DuPage County, just thinking of that, versus the city of Chicago, there's so many choices out there. So I always look first to hear where a buyer is price-wise, because communities differ greatly in price range. Looking at Hinsdale in DuPage County to West Chicago on the western side of DuPage County, and a 2,800 square foot house, you probably have $1 million price range for the same house. So understanding is something that you think you might know what you could afford, but really when you're looking seriously, you need to talk to your lender. And it's what it's all about here. It's what DuPage is doing, and trying to help you get educated, and that's where I go knocking first. I like to know that my buyers, when working with someone, has really been pre-qualified, at least, if not pre-approved in advance. Saves everybody a lot of time, but it also saves the heartache of getting attached to a community or a house that you really can't afford. Proximity to work is probably the #1 criteria that people ask me about. I'm starting in my search. We don't want to be more than 20 minutes from this is where we work, and that's great. If you're looking downtown, you're probably going to be most important factor there, the train and accessibility to train, and how far you are from the train, and how long of a walk you'd like to do to the train. So that's all in location. The type of housing you're looking for, as Cheryl said, the transition from apartment living or living at home with your parents, possibly on a first-time home buyer where you haven't had home maintenance, makes attached single-family houses where the exterior maintenance is done on the actual building and the lawn maintenance is done for you, kind of an easy and attractive transition. But you're typically going to pay $250 to $400 on a monthly assessment, depending on the price range. So that's something that you need to think about, how important lifestyle things are. Proximity to the central business district where you have retail services, whether it is in town or as an incorporated or unincorporated, where you may have well and septic and not have some of the city services that are provided, but at lower tax rate. So these are all things that you may have a feel for, you may not have a feel for, but if you hit some of those and you kind of make a list and prioritize what's important to me or us as homeowners, that'll be hugely beneficial when you go to consult with your realtor. The taxes are a major issue, as Cheryl said, and right now with the amount of distressed housing that's out there, meaning foreclosures and short sales, you're looking at property values that have sometimes dropped $100,000, and unfortunately the tax assessor has not dropped the taxes. So the 2.25%, 2.5% range works on new construction. But it really is important once you start to narrow in on a community, you get a feel for the taxes and understand whether that's going to be something that you're really comfortable with or not. I mean, you may not be comfortable with it, but you actually can afford it. And then once you've narrowed that list down on your preferences, you can have a search set up and start to look at the communities by actually driving through them and getting a feel for them and seeing if one feels more like homey than another. Your realtor would be able to set up a number of searches for you, or just one big search and have a number of communities. So you don't have to come with a full understanding of what you're looking for as in the community or the type of house. I find that changes as the search goes on. You know, your new home is an investment, and understanding the longevity of your stay at this home. It used to be said when I started 20 years ago, 6.6 years was the magic number. And certainly this recession has held people in their houses longer than that. But looking at the houses that are out there as investments, distressed properties that can be bought and probably sold in a couple years, and you really build your equity with that first purchase if you are the handy person who wants to deal with a distressed house. That could be a focus, and that's certainly a search criteria. On the other hand, if you plan on staying in this house for 10 years, then maybe it's not going to be everything that you dreamt of in the beginning, but you can see the investment potential if you add a bathroom or you knock out this wall. So how much you're willing to do yourself to improve the property. It may not be everything on paper right now, but that will help the realtor understand in the search too. Some people want to do work and some people absolutely don't. There's no right or wrong. It's just that it does parlay into the investment. I know we talked about Trulia and Zillow and some of the websites that people are surfing, and I've had a number of searches set up over the last year where I'm working with buyers and they'll come to me and say, Denise, what about this MLS number? And they'll shoot me 3 MLS numbers, and it never fails that one has just disappeared or wasn't there, I don't know. And then the other 2 have been under contract for 1.5 years. I love Zillow. I work Zillow. I'm, a preferred realtor on Zillow, but they are not always the most accurate, nor is Trulia, nor is Realtor.com. The MLS is. And the DuPage Credit Union, their mortgage department, a couple years ago sat and started thinking about how can we get a residential rebate or a residential realtor assistance program where we kind of are working with realtors of the same mindset to handle our clients with the same basic mission statement that we have in service-oriented, good faith dealing. And I've watched this program grow from just a few realtors to now over 20 in a very large area, all experts within their marketplace and professionals with a number of years of experience. And they have set up a website, which I don't know if you've been on and looked at or not, but it's My Home Search. And you can go in just at the beginning stages of your search and not be hit with hard sales where there's people calling you or trying to get you out, just to assist you in your search to figure out what it is that you're looking for. I have varying points of decision that buyers come to me with, and sometimes they may not be buying for a year. Sometimes they want to go out this weekend and they're ready to go. So, it's really what you want when you go and you fill out the information and then you get a search set up. Understanding the value of a property is done through a broker price opinion, and a comparative market analysis is performed by a realtor, or you have an appraisal on a property, which is a certified appraisal done at a cost. And when you have a realtor that's utilizing the MLS, which is the system that this My Home Search refers you to, that is the most accurate information out there. It's up to date on an hourly basis, actually, point of entry time. And you have a professional that can give you a comparative market analysis on a community and really look at what you can afford and direct you to investments and help you as a professional, which is what you look for with a lender. And that's the kind of group that they're providing with this Realtors Residential Rebate Program, where you get realtors' opinions that are going to be the pre-qualification that you're looking for.
Hey Denise, I just want to add in really quick. That slide beforehand was the My Home Search form right there. As you can say, get free real estate MLS listings, and there's no sales pressure involved. When you fill out that form, we'll have one of our experts actually send you real estate listings, and those are the MLS listings that Denise is talking about. MLS listings are different than, let's say, a Zillow or a Trulia, because those are the most up-to-date listings that you can find. They don't include closed homes or anything like that. Whatever a realtor actually sends you, or in this case, My Home Search, where you just fill out the form and we send you the listings, includes all up-to-date information. As you can see on this slide, it gets into detail actually what types of floor coverings are there, what's going on with how many rooms are there in the house, what are the floor coverings in there, what's the subdivision, what's nearby. A good realtor like Denise can tell you all of that, and all of that is also included in the actual MLS listings that you're receiving. So.
And then once we set up a search and we narrow that search, you're on the MLS. That search will come to you. If you want to get notified twice a day, I can set it up that way, or any realtor can set it up that way. If you want to get once a week, you can get once a week. It depends on how urgent you're ready, how close to being ready to buy you are. But the thing about the MLS is that you can also communicate back and forth through it's NRED Connect MLS, so that more than just seeing these listings, you also can say, this is the one that I want to see. Mark it as interested. You can write notes back and forth. If you're going out on a weekend to see 5 properties, this is the first one I want to see, or this is the most important one, I don't want to miss this. And so, it all is how ready to go you are. I think most realtors are going to respond that way. Certainly the realtors within the program at DuPage Credit Union that I've met are all that way. And, I think when you're starting something, a lot of times you just hesitate to, there's so many choices out there, and who do you go to? And we were talking about what makes a good realtor, and if you don't have the, follow the yeah.
Well, actually, you're revealing all the tips.
Yeah.
All right, let's keep moving on, and let's see if we can go into some more of these tools that we were talking about, right? So the next one here is greatschools.com. So how can that help people out?
Well, if you're a first-time home buyer and schools are going to be or are currently important to you, the most important source that we have to test is the ISAT scores in Illinois. And greatschools.com takes those ISAT scores and gives some parent review on school to school within the communities. And that's always been a great source. We pull from that in the MLS. The MLS has some assessment on schools. The ISAT scores are available annually, published with the Chicago Tribune. If you're getting the newspaper, if you're not, you can go online and pull the ISAT on their annual report. Also, the state has the Illinois State Board of Assessment website, which is highlighted on the slide following Great Schools. And I'm looking for that up on the header there, but I'll give it to you if you don't have it. It's www.isb.illinois.us/assessment/isat.htm.
And guys, you don't have to really remember that, because we're going to give you all of the links about all this that we're talking about at the end. But if you did remember that,
yeah, you get points because it wasn't easy. Okay. Spearling, is that what we have next for bestplaces.net? This is it's a broad community comparison across the nation. And so if you were coming into the Chicago area, you're a fairly new resident and you want to compare communities, that's a good source. If you're familiar with the DuPage, Kane County, Will County area, then I think that you probably don't need this Sperlings, but it does a lot of the evaluation that if you're just looking at how would I go about comparing communities, there's a crime comparison, there's school comparison, there's income comparison, there's cost of living comparison. So if you're looking to be effective and do your homework a smart way, it's probably a good source to just try to copy their approach. I like the way they do their research. And then the next is go to the city websites for information. There are sources for community information on the internet, like Best Places, but a great place to compare communities on a number of levels is just Google and Wikipedia and seeing what's been written about the communities and then getting out there and checking out those communities. And when you're working with a realtor and you're considering a very large demographic and location, then you really need to do some of the homework. I think we went to great schools, and really as a parent or potential parent, you need to understand what the schools are based on the facts, and those are available to you, and that's your responsibility to take a look at those things. And I think in the same regard, people have varying levels of concern on crime, and the county has a website, and also the Family Watchdog website is excellent that we've listed here. So those are tools that are available to you as well.
This second slide here is also from Family Watchdog. It's a great tool for seeing like registered sex offenders and other kind of potential issues in your neighborhood that could potentially lower the value of your home. Also on Family Watchdog, well, again, we'll give out the links at the end, and you'll have access to all of those links. It also gives you kind of the violent crime and different like murder statistics and whatnot that could impact the value of your home later on when you're wanting to sell it, or kind of lead you astray if you're wanting to buy a home, right, in a particular area. It'll give you some insight onto what the crime statistics are for that. All right, so Denise, you're going to have a twofer here. So you got both number 6 and number 5. Or actually, I'm starting this one off.
You got the goofy guy.
So number 5. So the number 5 tip. And I'm certainly going to bring in the pros on this one. I'm no pro, but just from my own personal experiences and what I've seen from relatives buying homes and things like that. One piece of advice that I'd give anyone is to really bring in a friend with experience, right? And that can mean a mom, a dad, a sister, brother, a close family relative, or a friend that has recently purchased a home. And when I said friend, you don't want to go with this guy, right? Not this friend. That's the one that helped me hang my Christmas lights. But you want to find a trusted friend, someone who's had recent experience, right? What are they going to really tell you? They're going to kind of look over all the paperwork from the mortgage area. There's a lot of paperwork there, right?
Just a little bit.
Yeah. And they're going to make sure that what you're doing is pretty consistent with what they did, right? If they had a good experience, hopefully. But, when you bring in a friend or a relative or a family member, it's kind of another side of that coin as well, right, Denise?
Yeah, I guess you just want to make sure that your family, friend, parent, whoever it is that's providing the support is in a supporting role and not in a controlling role would be my advice, because it can be sometimes as it gets to the point where you're making the decisions a little confusing on who's making the decisions if they're controlling you, or trying to have too much persuasion on your decision.
It is nice to get the opinion of a family member. I can remember when I bought my first home, the home that we looked at, the very first one was empty. And once you start to kind of picture, I can see that piece of furniture over there, or I can see my kids playing over there, you start to become very emotionally attached to the property. And I can remember our realtor suggesting that we talk to my parents at the time, because I was ready to sign a contract and that's all I cared about. And thankfully, in that situation, my parents were the voice of reason who said, okay, are you sure this is really what you want, or do you really want to take some time to think about what you're doing? go and look at some other properties to make sure that this is the house for you. So in that situation, it worked to my advantage, and we did not end up buying that first house.
Wow. So that's some good stuff. But, you know, whichever way you want to look at it, you're going to have someone involved. Whether that's a good or bad thing, that's just something to kind of keep in mind, you know. All right, so let's keep going here to tip number 4. And this is the one Denise spoiled a little bit earlier.
Yeah, and I'm actually adding to it now because I'm thinking of how this ties in a way that I hadn't thought of previously to bringing in a friend. And, you know, I think your realtor is not going to be your friend for life, but at the moment that they're assisting you in the purchase, they should be your friend. There is a fiduciary responsibility that a realtor has to put you before them else. So that they should not be pushing you into making a decision. And I guess my perspective on the friend and family thing is sometimes there's such a relationship with friends and family that it minimizes maybe a little bit the trust issue starting in that new relationship. And you really need to have, you need to be able to be confident in the abilities of the realtor and their understanding of your needs, and you know, that is their responsibility to understand your needs and perform what it is that you need to, you know, make that first house that you really have the house you want of your dreams. As far as what makes a good agent, I think, you know, communication is critical. You're making a list of all the things you want. You're prioritizing that list. And there's a lot of things you're not going to know as a first-time home buyer. So sharing the list and communicating with the realtor, you would hope that the realtor that you're working with hears what you're saying and is a good listener. But communication is critical because there's going to be a lot of education that's going on here with first-time home buyer. Knowledge and skill, we jokingly talked earlier about doctors and the skill level and a surgeon. And if you, not saying that a realtor is a surgeon by any means, but someone that has done a particular procedure a number of times is certainly one that you would feel much more confident in going in and dealing with somebody that's never gone through that procedure before. This is going to be one of the biggest purchases, expenses, financial obligations of your lifetime, and you really need to be working with somebody in this market especially that is knowledgeable and skillful. You may know about some of these distressed properties as a realtor, but have you really done a HUD loan or you know, a home path or the government foreclosures that are out there? And getting through that one time can be scary, but you don't want to be the one that's going through it first time with a realtor that's never been through it before. Availability of a realtor, you know, in the spring market everybody can get kind of crazy, but really you should expect to have a response on the day that you call the realtor. Most times when somebody calls me, I answer my phone because it's easier to deal with that call right then and there. And understanding first-time home buyers are pretty stressed. There's a lot of new things out there, and they have a lot of questions. And going back to the communication, it's key to be available. Follow through. You can promise the moon, but you better deliver. And I think that MLS search saves a lot of time. It gives the buyers the opportunity to take their time, and you can communicate to your realtor on that website when you're ready to go and you want to get out there and see things, and you can pick up the phone and call. And once you have the opportunity to get out there and see a few things, you know, you're going to be asked to sign a buyer's agency agreement in the initial stages, and you want to make sure that you've developed a level of confidence and comfort because the procedure can, you know, the process continues from there. And see, we have the team coming up next, I think, right? So here is an example of the DuPage Credit Union Mortgage Residential Rebate Program website, and some of the realtors, we have almost 20 now. We cover a very large geographic area. We have similar business models, and we've built our business on service. And you can go through there and take a look and see might fit your mode.
Definitely, one thing, if I just want to add just really quickly, all of our realtors within the residential rebate program, which we're showing on this slide right now, on the Find a Real Estate Agent page, we'll actually give you the link later on as well. All of them have been pre-screened, pre-selected. We interview all of our realtors to ensure quality, and also that they've had a good reputation like Denise here.
I guess the most important thing on that to the buyer would be that there's a rebate. And what is the rebate? The rebate is 20% of the sale or purchase commission. So, you know, if someone brings me, if I'm working with RE/MAX in Arizona and they send me a buyer who's coming to Chicago, I, as a realtor, have a professional courtesy of a referral. And in the case of the DuPage Credit Union residential rebate program, that referral is going to you. They've done the homework, they found the realtors for you, and they've negotiated to get that referral back in your pocket for, you know, whatever. You can take it at closing, you can take it afterwards.
Yeah. All right, so we'll have the link to that. It can be found on our website, it's dupagec.com as well, but the link is a little bit longer. So we'll include that, the links at the end. Actually, after you get out of the webinar, we'll send you, it'll redirect to a page with all of the links and all the information that we've just talked about in the webinar. But we're not done yet. So number 3 is get a home inspection. And I think this one's a really important tip. Right, Cheryl?
I agree.
Recent home buyers had a question on whether they should do an inspection or not. And, you know, I think of some of the nightmare situations where people didn't want to do an inspection, or they had a friend of the family. The state requires a certified inspector, and, you know, you're not going to get down into a crawl space and crawl and see what's down there. And in the recent inspection, the inspector found a number of issues in the crawl that ended up totaling a $2,000 buyer credit with a negotiation through the attorneys. And, you know, that's $2,000 that down the road they would have had to, or maybe in the first month, pulled out of their reserves. And they were very concerned about their reserves. They, you know, were having a hard time just getting everything together for the down payment. So $275 to $400, whatever it is for the certified inspector that you end up working with. They not only inspect the property, but for a first-time home buyer who hasn't had to deal with home maintenance in the past, they're going to walk you through home ownership. These mechanicals, what you do to keep them up, what you do to maintain the exterior of the house. And it's going to give you peace of mind to know not only, you know, the nooks and crannies of the house, but what you do to preserve your investment.
Hey, Denise, who don't you want to do that home inspection?
Yeah, I remember him. He was a bit of a problem.
So how does that kind of tie in, right? You want to get someone credible, someone that's a registered kind of home inspector, they're insured and everything like that. And they're going to really take care of you in the long run, because that $300, that's nothing compared to what you can be paying, you know, later on in repairs, especially if you're buying a pre-owned home, or even like a slightly older vintage home.
Well, the lender won't give a loan without an appraisal, and you, the buyer, should not buy a house without an inspection. You want to know what you're getting.
All right. All right, so that was number 3. Now it's time to tip number 2. So, Cheryl, take it away.
All righty. Well, with that said, you want to get everything in writing. Don't rely on verbal information. Hire an attorney. Make sure that you have someone who is going to represent your interests. Illinois is an attorney state, so that means that the title company who's going to be present at closing is there to represent the lender at closing, and not the buyer. So you want someone there who's going to represent your interests, who is on your side, and who's going to protect your interests. The cost of an attorney is probably around $400 to $500 on average, and it's well worth the investment. I've been to a couple of closings where the buyer did not have an attorney. The title company will not even go over the paperwork in most situations. So you're kind of totally on your own. So be sure that you have legal representation to assist you. Again, I can't say it enough, get everything in writing. Once you sign that contract, your lender should be providing you with initial disclosures. Those are going to include a good faith estimate and a truth in lending disclosure. The good faith estimate is going to be a statement that gives you a ballpark of the cost a lender is going to charge you for your loan. You also want to look at that truth in lending disclosure because that's going to discuss the terms of your loan. Compare the disclosures that you get with other lenders so that you make sure you find the loan that's best for you. And never be afraid to ask questions. A great lender will take the time to answer all of them for you. Be careful if you're going to purchase a distressed property. The one thing that you need to keep in mind is even though you might be signing a contract to purchase, usually if it's a short sale, you're going to have to wait for bank approval from the other institution, and that can take some time. So keep in mind that if it's a number of months between the time of application and signing the contract to when that bank approves it, there are things that can change along the way with your application, and you might have to update some information prior to closing. A couple of stories for you. Please don't spend your down payment funds before closing. We've had this happen where a borrower thinks, I gave you my bank statements, you know what kind of money I had. We have to check that again before closing. So if your money is in your account and then a few days before closing we look and the money's not there, you're going to have a big problem. We've actually had this happen where borrowers are then scrambling to try to get additional proof of funds to be able to close on time. And a lot of times those closing dates are getting kicked out. They're not getting closed on time because the borrower didn't have any proof of assets to close. Another thing you don't want to do is don't make changes to your credit profile during the loan process. We have seen borrowers come in, we pull credit. Again, we're checking credit throughout the loan process. That's a requirement. We're going to look right before closing. And if all of a sudden there's a brand new car loan out there, then we're going to have to factor that into your loan decision. And that can alter the pre-approval, it can alter the terms of your loan, and you're going to have to probably bring in additional information to provide to us so that we can't factor all of that into the loan decision. Again, more delays can postpone your closing, so you need to be careful.
And that's basically with any lender out there, right, Cheryl?
That's any lender out there.
All right, so I guess the wait's over.
The
right?
big one.
So six tips down. There's one left to go, and I think definitely everyone here can agree the number one is to get pre-approved first. And why is that important, Cheryl?
You want to have as much information ahead of time before you actually start buying properties or start looking at properties rather and get emotionally attached. So get informed. Talk to a lender early on, even if you're not planning to purchase for a year or two. Start early. Have some time to really work with someone who can kind of help prepare you for all the steps that you're going to have to take. We sometimes will have people apply a couple of years in advance, and we can counsel them throughout the process, give them some tips and techniques on how to save money for closing, what they should be looking for in a loan. Review your credit as early as you can in the process as possible as well. And then discuss everything with your mortgage specialist. Don't hold back information. Disclose any information that you have at the time of application. And then it's really important to get prepared. Gather up the documentation that you're probably going to need for the process, and typically that's going to be 30 days worth of pay stubs, W-2s. You're going to need tax returns if you're self-employed, usually 2 to 3 years, bank statements, and your down payment information. Get all that information together. Notify your specialist if anything changes throughout the loan process, and if anything changes with your financial status or if you change jobs. Let us know right away so we're in a position that we can help you. And whatever you do, keep the lines of communication open. We have absolutely no problems talking with our members multiple times, whatever it takes to make sure that you're comfortable and you know what you need to do. And you can start early. A responsive lender is going to be there for you every step of the way.
That's a good point. And this form, we're going to have a link out to this form. It's actually really easy to fill out. And hopefully we can, how long does it take to respond back to people?
From the mortgage consultation form, usually we will try and immediate if possible, but definitely within 24 hours.
Perfect.
You know, one thing we didn't have on there for, you just said down payment, and As far as percentage of down payment, I think first-time home buyers are often looking for that. What kind of percentage should I be planning for? And another thing is I didn't say anything about the earnest money when you go to purchase. So on the realtor end, you have to have some cash saved for the earnest money to secure your contract. And that depends on price range, it depends on location, but that's something when you talk to your lender, they can give you a feel for when you talk to your realtor, because it does vary.
And the more you put down, the better, but each situation is unique and everybody has specific needs. And the more you can put down, the better position it puts you in. Usually you can get a better rate, but there are some things that you have to consider. If you're not putting down 20%, which is what they'd like everyone to put down out there in the regulatory industry, you're going to pay something called private mortgage insurance, and that's going to increase your payment. And again, private mortgage insurance is insurance that covers lender in case of default. So the higher the loan amount based on the value of the property, that's going to have an impact on how much you're going to pay monthly for that. So it can add to the cost of your loan.
All right. I think one thing that's getting pre-approved first is that no one likes to get let down, right? So when you get pre-approved first, at least you have an idea going in, when speaking with a realtor, of how much house can you afford, right? So if you're planning on that mansion, but you don't have the funds for that, and you're unaware of what you can actually afford, and you're not pre-approved for that home of your dreams that you've probably looked at on Zillow or Trulia or whatever beforehand, that's going to be a real big letdown. So this the pre-approval helps keep things, I think, in focus for everyone.
And like I said, it's the first step for me.
Right.
That's the first step in the criteria. What can we really set as a realistic purchase price? Have you been at least pre-qualified?
All right. Well, I think that basically wraps it up, and we're going to take care of some questions in a minute here. But I just want to let everyone know, thank you very much for attending. Definitely, I know it's 7 o'clock. You probably got the DVR running with your favorite show, so thank you for bringing us into your prime time weeknight. Some links to keep in mind here. If you guys want to check us out over on Facebook, we've got a good contest going on. You can enter into that and actually win an Amazon gift card right now. You can follow us over on Twitter to keep up with everything we're talking about and some of our newer promotions. And also a good resource, especially for everyone on this webinar right now, is our YouTube channel, and that's at youtube.com/DuPageCU. We've got a couple videos out there talking about our mortgages and more specifically the residential rebate program. So right now, let's get right into those questions. Let's start at the top first. As we're answering these questions, guys, feel free to go in and start asking them in that chat box in the bottom left-hand corner. This is a good opportunity to get your questions answered by actual experts, not me. So let's start. Matthew asks, is there much variability in property tax rates within DuPage County?
Yes, there is. And the question, strangely, is Wheaton, Glen Ellen, and Lisle, which are actually quite close to each other in tax rates. But if you were to look, Hinsdale, which is a more expensive on average dollar price of a home there, but the tax rate is substantially lower. And as you go to Kane County, it's substantially higher than the communities you're asking about. So again, if you're unincorporated or incorporated, your taxes are going to be lower in unincorporated. And then within the communities, like I said, when you're comparing communities, do pay attention. And there you can ask your realtor to pull a tax report on a property, and that will include the tax rate. So even if it's undervalued because of a distressed sale, the assessment is not going to affect the tax rate. The tax rate is established by the township, and that will stay the same in that given year on a comparative basis. Is that clear?
I think so, yeah. How about other counties? Is it kind of the same kind of thing?
I think that the counties are different. Cook County is, it used to be low and now it's high. There's also transfer stamps and transfer tax on purchases, which vary within communities, and that's something I didn't mention earlier, but I would sitting down with a buyer.
All right. All right, let's take one from Alex and Lynn. And I think they're asking about the MLS listings. So I think you're specifically asking about My Home Search. And for that particular service, when you go to dupagec.com/myhomesearch, we're only going to help you out with those listings, I believe, within the state. What can they do if they're looking for listings outside the state, for MLS listings?
Well, you know, each state association, each MLS, Multiple Listing Service Association, has agreements with the brokers within that community. And so I can't state what McKinney, Texas Realtors Association has. I can state what we have. And there are ways with, like RE/MAX has a national site, and you can go on there and you can find listings. But I don't find all of those different sites. I happen to like to do research in real estate around the country, so I spend my time, instead of watching TV, playing on the computer. Ask me about Anthem, Arizona, for instance. But I think you have to figure out where you're going if you're talking about this, and be specific, not just broad across the country. And within that community, then do some research, and you would find a multiple listing service. But we are not operating here on your home search outside the state. And we do have some things in our multiple listing service outside the state in Wisconsin and northern Indiana and Michigan, but they're sparse and it's not a complete list. You would be better off going into that community.
So finding like a realtor within where you want to live.
Yeah.
To get those listings. Okay. All right, let's go to
Which usually the realtor you're working with will refer you to a professional, the way DuPage Credit Union referred you to a professional here.
Okay. Let's get one from Brian. And Brian asks, is there an online source that compiles the approximate property tax rate by suburb? So that kind of sounds like MLS.
Well, you know, by suburb. That's one of the reasons I use bestplaces.net, but I don't think they have every community on there, so I'm not sure they may now. I think the state has a website. I'm pretty sure, I'm just trying to think of what it is. I'm fairly certain the state of Illinois has a community website that you can look at all of the different communities, which is quite extensive. I don't know that it's going to be like and you could probably download that into an Excel spreadsheet to do the communities that you wanted to, because you would be looking at like yellow pages. You know, you'd have a number of communities you weren't interested in that you want to purge off that list in order to really compare.
All right. To go on with that, I think some sites like Trulia, within their listing, they also show like the estimated property tax, but to get a real estimate, ask a realtor.
Well, and again, property tax versus tax rate. His question is specific. It's accurate. It's tax rate, right?
Okay.
So yeah, the property tax rate versus property taxes, two different things.
Yeah.
And because the assessment impacts the property tax, and the assessments are all over the board and inaccurate right now because of the distressed market that we're in, which means we've had a lot of foreclosures and properties are trading below their real market, or you know what would be considered normally a real market. I think if the distressed market is the real market, then that's the real market, right?
Yeah.
So.
All right. So another question. We had some questions about, you know, if the slides are going to be available, the links are going to be available. When you leave this webinar, you're actually going to be redirected to a page that has all the links available. Also, later on, if you get lost, we're also going to have like a recording of the actual entire webinar. And we'll also post the slides live on a site called slideshare.net, but that'll probably be within probably tomorrow or the next day. Yeah. Let's see the next one here. Jessica here. So she's saying a realtor recently helped her out find a rental townhome. The realtor mentioned different kinds of city and state aid programs for first-time home buyers. Are these types of assistance programs something that many or most realtors deal with or are familiar with?
Well, it's really a lending issue, you know, as far as what you qualify for. So I would say that that's where you need to direct the questions, is really to a lender. As far as there are first-time home buyers programs available on some of the houses that have been offered with HomePath. But as far as the state programs, they change enough that there are programs out there. Again, I think you get pre-qualified on that with a lender.
And I would agree with Denise. It's probably really important to discuss with the lender what you're looking at doing. The credit union, for instance, right now, we don't really have any first-time homebuyer programs per se that are supported by the state or what have you, but in some cases, depending on what you're trying to do, you might not even need to be looking at those kind of situations. So talk to a lender first. They can give you some advice and let you know kind of what you could be pre-approved for, and that might help you make your decision as to what direction you want to take.
All right.
It's very hard as a first-time home buyer to avoid having minimally a 3.5% to 5% down payment in this market. With what's happened with the collapse of Fannie and Freddie lending, it's a requirement with most lenders anymore to have 5%, and there are some FHA programs out there, 3.5%, and a few weird HomePath programs that are, $100.
Good ones.
But they're very, there's a lot of limitations in that, and I'm trying to just kind of regroup on the 3.5%. The FHA is a limit in that you want to buy a condo, they may not do FHA. So, it's a good idea maybe to look at two different types of qualification if that's where you're targeting it.
The bottom line with that question is to consult your lender, your mortgage lender.
Yeah, consult with your lender.
They'll take care of you. All right, let's see. Matthew, he's asking, what's a buyer's agency agreement?
Oh, a buyer's agency agreement is required by the state of Illinois for all buyers now. So there's varying forms of commitment, I suppose, on buyer's agency agreement, and brokerages use their own, and there's also a state agreement that's there. But in the same way that you had a listing marketing agreement with sellers, you now have a buyer's agency agreement with buyers, which gives the level of service, and it's pretty basic. I mean, there are some that are 4 pages, but that kind of changes realtor to realtor what you're going to be offered.
All right.
It has a little bit to do also, I should say, with dual agency. It specifies agency, and I think being a dual agency state, which is a conversation for a whole nother evening, that you need to have that clearly understood when people are doing their own homework, and maybe they're working with a realtor, but they're still going into open houses, and there's a realtor in an open house that isn't the listing agent. They just happen to be sitting it for another agent, and they talk to my client and now feel they're entitled to represent my client, but my client has a buyer's agency agreement with me, so there's clarification on who the buyer's working with through that agreement.
Let's see, Keith, do you deal with home sales outside of DuPage, like Lake County?
This is, I think, to you.
Probably to the lender.
I think it's to everyone. I mean, we have, within our network of realtors that have been pre-screened, we cover a lot of Illinois, especially like northern Illinois.
We lend in Illinois, and Lake County is perfectly fine. We do Lake County, Cook County, we've done loans in DeKalb County, so pretty much the state of Illinois is where we're able to lend.
And for me, I think it's, I think there's a limit on what you can do as a realtor on a geographic area. I live down in the city, so I do work a few areas of the city, typically for friends, but I have investors in Will County, and I work up to Barrington, and I go from Elburn and Yorkville and
She's a traveler.
yeah, Plano into the city. So not everybody is going to choose to work that large of an area because it's time consuming just the commute on it. But it's better to have somebody, you know, when you're in DuPage, Northern Lake County would definitely, to me, be much smarter for the buyer to be working with a specialist in that area. I saw a question there that I thought was kind of...
So Keith, I'd probably recommend to you to check out our Find a Realtor page, and on there we actually have all the towns kind of broken out, like their top markets. That's not necessarily reflective of like those realtors are only confined within that area, but if you find a town that's close by where you want to live, you know, definitely give them a shout. We list their phone numbers. There's reviews out on there. You can also contact them directly or sign up for the residential rebate program, and we'll hook you up with the appropriate lender.
So that goes to the question, can you please elaborate on the rebate program?
Yeah, okay, so let's elaborate on the residential rebate program.
Cheryl?
You want me to go ahead and do that? All
Yes,
right.
please.
The residential rebate program, really what it is if you work with a lender in our network, they will give you a refund of the agent's commission back at closing, depending on the dollar amount of your loan. So it's really a way, one, for you to get in touch with a really great realtor who's been pre-screened by the credit union, and really you're getting a rebate from the credit union for that relationship. So if you come to the credit union and you go to our website and you select one of those realtors, they are going to go ahead and give that rebate to you.
Which specifies on the website 20% above $100,000 and 10% below $100,000 of the total commission on the closing statement.
Correct.
And that's for members of the DuPage Credit Union.
That is correct.
Yeah, that is unique to DuPage Credit Union, and you know, one of the main points of that is your alternative with other lenders or picking a different real estate agent is basically nothing. Whereas this actually offers you an incentive to go with a pre-qualified, pre-screened real estate agent that can help you find a great home in the area that you're looking for. So yeah, I'll have the link to the residential rebate program as well. I want to get to Bobby's question. Bobby asks, how long is a pre-approval valid?
Pre-approval is valid for about 90 days, Bobby. If you're concerned about getting pre-approved and having that pre-approval expire before you do something, that is perfectly fine. What happens is some of the documents that you provide that we use for pre-approval will expire eventually. So simply all it is having your mortgage lender go ahead and kind of reinstate your pre-approval by refreshing your documents. So it's okay that it expires. It makes sense to get it early, and then it can be updated throughout the process. So but usually about 90 days.
And if somebody came to me as a first-time buyer, I would want to see a fairly current pre-approval, which to me would be 30 to 45 days. Bobby has another question there that's kind of interesting at the bottom. Most loans typically require 3.75% down. As a minimum, I think is the addition.
Bobby's asking, most loans typically require 3.75 down. Are there programs out there where all of these funds don't come from the buyer?
At this point, there are no 100% financing programs that I am aware of, and the borrower does have to have an investment in the property. Typically, it's going to be about 5% down with conventional financing. So you do have to have an investment in the transaction.
But the question is, can the money come from somewhere else?
It has to be the borrower's own funds.
So it can't be closing costs. I mean, it can't be closing points from the seller.
Yeah.
No, you have to have some of your own funds in the transaction. So the minimum required for the borrower would be 5%. You can get funds from other places. So if you're getting gift funds because your parents are going to give you money to purchase that home, that's fine. But you do have to have, with conventional financing, 5% down, and part of that does have to be your own funds. You cannot, there's no way to have someone else finance the entire down payment or provide the entire down payment for you.
All right, so that was a good question. Let's see. So, Lewis, he's saying, I've seen real estate agents say they work in particular markets, like on your website, but what if you want to use them in a market that isn't listed on our website? So,
Yorkville and Sugar Grove.
Yeah, as an example, he states, let's say on the website it says they're working in Yorkville, but you want Sugar Grove. And absolutely, we can travel, they can travel across.
Well, like I said,
lines.
I mean, I work such a large area, and when it comes to sitting down with the web page that you guys have outlined there, if there were 20 of us and we listed 20 different communities, you'd be scrolling all day. So I know there are people who, I've switched mine around. I was working out of the Glen Ellen office. Now I'm working out of the RE/MAX West Chicago Cornerstone office. But, I would say Glen Ellen, and somebody in Glendale Heights would call me. Glendale Heights wasn't listed there, but certainly I work Glendale Heights. I didn't have Lombard. People from Lombard were calling me. So then I added Lombard there. I didn't have Lisle. Now I have Lisle. So I kind of move it around, but I honestly think, if you were to ask me, I personally would say Centro DuPage. There's a friend of mine that's on the residential rebate program, and he's in Fox Valley at the center point. And so, he probably would say Fox Valley. And what does that mean? There's so many communities within that. But I just did a rental in Plano, that was my landlord and my tenant, and have clients around here that are Yorkville and Sugar Grove. So, I think you've got professional realtors within that group, and if they weren't comfortable with the area when you called them, which I would do based on proximity to their stated communities, then they would refer you to another realtor.
And there's no fences. I mean, they'll just give it a shot. we'll match up with the right realtor where you want to live. All right, so let's get one here from Matthew. He's saying, is there a cost associated with being pre-approved through DuPage Credit Union?
No, sir, there is not. You do not have to pay an application fee with the credit union until you are actually ready to move forward with the purchase. So when you provide the contract and we're ready to order the appraisal, you would pay the application fee, or at time of locking in, whichever comes first. Typically, it's the appraisal and the contract. But there is no charge to be pre-approved or to consult with one of our specialists.
That's right. You'll get a free smile too. So
every time.
Yeah. So if you're interested in going with DuPage Credit Union or DuPage Mortgage, which is our mortgage division, you can come in and talk to us whenever you'd like. Everything's free. We're not going to charge you by word or anything like that. So you can always give us a call, contact us right on the website, and we'll get you in touch with a mortgage specialist or mortgage expert that can answer all your questions. All right, so let's move on here. Lots of good questions, so keep them coming if you're still there. We've got one from Medha, and her question is, what's your take on borrowing withdrawing from retirement funds?
Matt, I think it's fine if you decide that that's what you're going to use. You have to do it well in advance, but what I would caution you against is going into your retirement fund and emptying it entirely to go ahead and put down on a mortgage, because you still want to retain some of your assets. But we have seen borrowers do that in the past. As long as you can withdraw it from the fund and you do it well enough in advance and it's liquid during the process, well before closing, it shouldn't be a problem.
And we had on the slide, this home real estate is an investment. And there have been times when people haven't looked at real estate anything other than a roof over your head. But certainly, having seen where prices went, and I am not inferring that they're going to go immediately back up to that point, but we have seen where they were, and we know the recession that we've been in, and prices are down, interest rates are down. I used to be a stockbroker with Shearson Lehman Brothers, and I just can't imagine a better time to invest in real estate or real estate investment trusts. I mean, I just think that the industry overall has been knocked so badly, and there's such great upside. So, it is a good investment.
And one of the things you probably want to really make sure that you do is, if you have an advisor go to that person and talk to them about what your plans are, because they can let you know how it's going to impact you financially, whether there's going to be any tax implications, and they can take a look at your retirement and what you're planning to do and really help you make the best decision.
And what your rate is going to be if you have to borrow against the funds.
All right, so let's see. Andrew is asking, is it a smart decision to invest, a large sum of your savings into your home purchase? And is it wise to actually take advantage of the full amount and buy that house at a full amount that the lender actually approves you for?
Andrew, you really want to take a look at your entire situation. I would not recommend taking all of your savings and putting it down on the house. Make a significant down payment if that works for you, but you want to have a cushion in case of emergency or repairs or if there's anything else that comes up in your life. So I would not recommend tapping out your entire savings for the down payment. Talk to a lender. We can let you know how much to put down to avoid PMI or how the down payment will affect you. The other thing is buy for the full amount the lender approves you for. I think it's important to buy for what you're comfortable with. Yeah. You can easily become house poor, and you don't want to buy a house that you truly can't afford, that limits the other things that you enjoy doing in your life, because there are situations where you can do that. So definitely talk to a mortgage lender and let them help you make that decision.
Right. All right, so I want to get to Michael, and he's asking, what are some hidden costs of buying a home that is older, like over 20 years? And just to intercede just really quick, I think if you ever watch, some of those like shows on DIY Network or whatever, there's one in particular where the lady goes in, she restores old homes, and that's a really good kind of example because, it could be like different things, like like a fund would be like a huge expense.
Yeah, and that would be like 100 years. But when you're at 20 years, you're talking about 20 years ago, the roof on that house when it was built might have only been good for 20 years. It might have been good for 30 years. The furnace might have only been good for 20 years. And so, these are things that as a first-time home buyer, when you're buying a single-family residence, obviously that inspection becomes critical when this is your question, because the inspector is going to go through, and unless there's 10 inches of snow on the roof, he's going to have a roof inspection, and he's going to be able to tell you what the life expectancy, it's an estimate, but what the life expectancy on the roof is, what the life expectancy on the furnace is. They'll be able to pull up the serial number on the dishwasher and be able to see what the life expectancy is. And if you're concerned about the cost, you can always ask for a home warranty in the contract, and that will cover you for 13 months, at least the initial period where you're worried about reserves.
All right. So let's move on to Robert's question. And Robert's asking, what's a good town to start looking for a first home in about the $200,000 range in Cook Lake or McHenry County? What are some of your favorites, Denise?
Oh, first question just begs to direct, which I don't know Robert. I don't know what he's looking for. I don't know the number of bedrooms he needs or anything about that. I know that he could go to Zillow and Trulia and start to get a feel for comparative houses, what kind of architecture he likes, what kind of living style, does he want to be in a condo, a flat, so that broad of a spectrum, that's enormous. Cook, Lake, and McHenry County. I'm going to beg off of that one.
Yeah, there's a lot of options there, but I think the main point is to seek out a realtor, and they'll give you the real deal based on what you want in a home. There are good towns, and someone else can say that's a bad town.
Well, again, we went to initially, what is your purchase range? He's got the purchase range, and then it's where are you working? What are your limitations on geography? And if you could live in any of those communities, then I would go to what can I get that meets my wish list, and talk to some realtors within those communities.
Or possibly use My Home Search to find out what's available in those areas, and then you can kind of look at the listings and determine what might fit your needs.
Right. Let's see. So I've got a question here from Alex and Lynn. and they're saying my husband and I don't have. Well, you know, they're not really looking for.
I read it. I love this question. Okay, this question goes to the state discrimination issues, and so
let me read the question first. So she's basically saying they're not really looking for a home that's really, you know, kid friendly, or, you know, they're not looking for a home looking for schools and stuff like that.
No, she's asking, is it important to consider?
I think she's looking at resale value
Right,
in the event.
right.
Should she look in a district
Is
where
it
it's a great
important
school?
to consider the better school district regardless of whether or not you have children in the school district at the time you're purchasing? And my answer is, if a school district is one of notoriety and stands out in DuPage County, and you pick those that people say, oh, Naperville has great schools, and then you look within Naperville, which schools are the best? Does that impact the values within that school district? Yes, it does. Is that, you know, going to be a buying criteria for you? Not necessarily, but it certainly will impact, like you said, Cheryl, the resale, the investment portion.
All right, so let's get back to another question. Hope that answered it for you, Alex and Lynn. If you have, at any point for any of these questions, if you guys need more elaboration or anything like that, just shoot us a message. And we'll have all that contact information provided for you in future emails.
Well, maybe we can take a look at some of these questions and answer them like tomorrow too. If we don't have time to answer them all tonight, I'd be happy to.
Well, we'll get through it. We'll get through them. All right. Next one is from Bryant, and the question is, how do you expect the housing market to perform in the next few years? So I'm guessing this is another one for Denise.
Okay, Bryant, my degree is in quantitative business analysis from Indiana University School of Business, and I used to think, oh, I really know it when it comes to projecting statistics. Well, silent, because I'm silent. This market has been incredibly destructive to one's confidence in their abilities to project. Supposedly, the government still has 5 to 7 years worth of foreclosures to put out slowly into the market, and they're trying to manage that without being too disruptive. Certainly, we saw appreciation last year. I think that it's hard to know with certainty that we're not going to have another economic issue, but it seems like the economy is doing well, and these are things that all play into the upside, and I think we've got a pretty positive future. Like I said before, I think with the interest rates being as low as they are and housing prices being as low as they are on a comparative basis to where they've come from, it is a really great time to make that investment and lock in that low interest rate, especially if you're going to hold something for 10 years. You may never see these prices again.
All right. Let's move forward here. Nora is asking, do lenders look at distressed properties differently than other properties?
Well, Nora, it's hard to say what another lender might do. I can tell you what our position is. And our position is that if buying a distressed property, the credit union requires a home inspection, because we want to make sure that we know exactly what's going on with that property, not only to protect you, but protect the credit union as well, and make sure that you know exactly what you're getting into.
Yeah, I think that's true for, you know, any lender, right?
Well, I can
Probably.
personally say that I have worked with the credit union on distressed properties, and they've handled it as well as any other lender that I've worked with over the last year on distressed properties. So I have no issue with that as a realtor.
All right. Lewis, again, Lewis is asking, what are closing points?
I think what you might be referring to, Lewis, is points that are required in order to get the loan with the pricing. The credit union, I can tell you, we don't charge points. Typically, you pay points to get a better interest rate. A lot of companies will offer a rate, but you're required to pay a point or two, which is typically 1% of the total loan amount. And that's something that would become part of the closing costs that you pay. The credit union doesn't typically charge points. It's an option. If you want to pay points to buy down your rate, you can do that, but it is not how we price our loans in general.
All right. Thank you very much for all the questions so far. So let's keep going here. Keith is asking, what information do you need to provide for a pre-approval?
For pre-approval, we typically have to verify your income and assets. So pay stubs, W-2s, tax returns if you're self-employed, and then your proof of assets. We do review your credit as well. So the best thing to do would be to go ahead and apply. So we can look at your individual situation and let you know based on your unique needs what you need to provide. But those are typically the basics.
Yeah, Keith, I would say to schedule one of those mortgage consultations with us, or you can actually apply online over at DuPage.com, and you can apply right then and there. But if you do have further questions, you can always give us a call or messages. Let's go another question here. What are the options available in case you do not have a 20% down payment?
There's lots of options available. As I had stated before, private mortgage insurance would be required, but that's going to vary based on your loan to value, the amount you're borrowing compared to the value of the property. So again, great opportunity to speak to a lender, a mortgage specialist who can go ahead, look at your situation, and kind of let you know what the difference would be between putting 5% down or 10%. But there are a lot of other options.
All right. Let's see. We've got a question here from Jeff. Is there a recommended percentage of your monthly income you should look to determine what you can afford for a mortgage payment? And is that a good way to figure out how much house you can afford? Well, Jeff, I want to just let you know, we have some really good calculators on our website, and one of them is the mortgage budgeting calculator, and it basically does exactly what you're talking about right here. But now I'm going to turn it over to Cheryl, and she might be also to elaborate on that question.
Basically, we're going to look at your total current payments, current debts that you have, and we're going to look at a proposed housing payment. And the way that we qualify you is that combined number can't be more than 45% of your gross annual salary. So that's kind of what your gross salary is every month. So we're going to look at your gross salary, look at all your debts, look at what your proposed housing payment is, and you don't want to see that ratio over 45%. Again, great opportunity to talk to a lender ahead of time, have them work these numbers out with you. Go ahead and take a look at the calculators on our website, and that should give you a lot of great information.
All right, and we'll also have a link to those calculators. After you leave the webinar, you'll be redirected to that page with all of the links and information that we've talked about in the webinar, and we'll also be sending you a recording of the webinar, as well as some other information that you might need or might be curious about in the following days. Let's see. One last one here from Louis. Let's see. What's a good amount to set aside to cover closing, inspections, and other kinds of costs?
Okay. Well, in addition to your down payment, closing costs can average around $3,000 to $4,000. So you're going to have to save for that. You're going to have to save to make sure that you can pay for 1 year's worth of an insurance premium up front, so you need to save for that. In terms of inspections, attorneys, you can figure maybe another $1,000 on top of that. If you're looking for how much should I save for home repairs, it's always a great idea if you have 6 months of principal, interest, taxes, and insurance. If you have that kind of banked for emergencies after your closing.
All right. Some of the other questions, they're a little bit more personal, so we're going to get to those separately in separate emails. When you signed up, you provided the email, so we'll answer those personally for you. There's a bunch more. I mean, if you guys have any other questions, you can always feel free to contact us. I'm going to give you the contact information after you leave. Or you can visit DuPageCU.com, schedule a mortgage consultation, and get your answers and get your questions answered that way. What else is there? I just want to thank everyone for coming in and spending some time with us tonight to talk about this. Hopefully everyone that's been in on the webinar has learned something new. Hopefully we're true to our word, the 7 pro tips. And like I said, you know, this is a non-profit financial institution. We're here for the community to answer questions, and we're here to actually help anyone with financial questions or that's looking for a particular financial product or service. So feel free to contact us at any time. And again, thank you very much and have a good night.